what does CEIF stand for, and how do you use it, and why?
It's sector ETF asset flows, and we really use it as a sector rotation model. It's a little bit of a misnomer, but we're tracking the velocity of money through several time periods to figure out where are investors kind of voting with their feet instead of
Hmm.
hearing what people are saying on TV. So what we have here is what we call our rainbow charts due to its beautiful colors, and on top, what it is it's tracking the CEIF score. What happens is we get a score for each time period. So we add up that score and we get a total net score for the CEIF. And this is utilities, and up top is the CEIF score for that time. So in the green, it means it's favored. At right now, utilities is favored. And then the bottom of that chart is its relative performance versus SPY. So CEIF is more based on relative performance. We want to pick the horses that are running faster than the market. In this case, we've seen around February 7th, utilities has gone into favored. Now it's touched a little bit into neutral, but overall has been in the favored territory. And during that time period, we've had a 12.7% relative outperformance in utilities. So we try to track as we see money flowing into a particular sector, tend to see, increased relative outperformance for that particular sector.
Hmm. And this is kind of the obvious question here. I mean, when utilities are doing well, that typically says, okay, folks are hiding. They're going to staples. They're going to utilities. And so, I mean, you have a day like today. Today on Wednesday, the 9th, where we have the market is up. You know, a huge amount. The XLK was up 13.4%. XLU was up 3 point, 3.9%. So a big disconnect between, what was very strong, having a big day of underperformance today. So do you ever get kind of, I guess, does that worry you when you see something like XLU doing well to say, oh, should I invest in this? Or if we turn, this is going to be where the money's going to come from.
Utilities has been unique because generally, I think historically, it's been more of a defensive sector. This last year, due to AI and a lot of the capital
Right.
expenditures going into technology, it has kind of played both sides of the ledger here. So for the better part of the last year, it's actually been an offensive stock in the understanding that a lot of capex expenditures in utilities were needed to supply AI with enough power. In this case, we were seeing utilities kind of going back to its historical roots is more of a defensive nature.
Yeah.
Our model had XLK, or sorry, had XLP, consumer staples, XLU, utilities, and healthcare, XLV, and
Mm-hmm.
it really defensively aligned. It was actually the almost the most perfectly defensively aligned the model has
Right.
been. I think I went back and looked. It was April 9th of 2020. We had this exact defensive alignment. The only difference being, and actually, if you pull up the heat map, is that we were almost perfectly anti. Anti-offensive stocks. As you can see here, our model had healthcare, utilities, consumer staples in the top three, and at the bottom had communication services, XLY, discretionary and technology. And that even during COVID, it wasn't that nicely aligned. What I'll be looking for next week is I want to see, if this is truly the turn up that we're, expecting. We had a big update today. If this is going to resume uptrend, we'll want to start to see this heat map. It'll start to flip. Next week
Mm-hmm.
it'll look a little bit like a Picasso painting as the numbers start to realign, and then we will see things like technology, communication services, or consumer discretionary move up. So, we rebalance this once a week to try to keep up with the flows. That's where the trading week comes in. But if this is truly a new leg higher, we'll start to see technology come in from off the bottom and start to move its way up the chart, move its way up the table.
Yeah. And I guess, John, to kind of wrap this up, I guess the concern here is, after coming in so sharply, you know, typically I feel like, or just historically, that usually takes time to kind of recover from. COVID was very unusual because it was COVID, and there got to be, you know, even though there was a lot of uncertainty, there was kind of everyone was rowing together on what can we throw at this to solve the problem. And I don't know we have that level of clarity yet. So I guess the question is, how, one day certainly does not a trend make, but what do you expect here in terms of bounce, or is it kind of a little bit of back and forth as we need to tighten up? What's kind of your not projection, but game plan, I guess, to say, hey, this is real, and we have put in a bottom. That's actionable, and I can make money off of.
Great question, and good observation. This is more difficult for me than it was with COVID because the messaging has been so inconsistent. It really can't be gamed out. So I think this is when our approach to investing and using models really becomes valuable. It gives you something tangible to hang your hat on instead of waiting for the next press release or the next tweet or whatever it might be. And so, two answers for you. The first one is asset flows tend to trend, and those flowing asset trends are what create the price trends that we see on the charts. So
Right.
looking at that, we just were looking at the heat map there, watching that heat map kind of evolve from week to week to week, it shows us where the flows are going. Sometimes the flows move from place to place. They've done that a lot this year because the market really didn't know if it was offense or defensive this year. Yeah, there's a lot of mixed messaging again. We had risen by 75% since the October 22 lows in the S&P. There's a lot of angst. But generally speaking, we're big fans of knowing where the money's going. We can't know what's going to happen tomorrow. We're not forecasting how much inflation. In my view, a lot of that stuff is really unknowable. So I'd rather follow the money, and it's kind of the phrase of our company. But we're trying to figure out ways to follow the money. We're trying to discover trends by following strong bursts of money in multiple time frames, and we follow that. Now, to answer your second part of the question, how do we know when this is the real deal? Two things need to happen for us. The first thing is the Asbury 6 that we looked at earlier. That tells me day to day to day what the condition of the market is, just like if you went to your doctor for your annual physical and he puts you on the bench and he does those 6 tests, checks your pulse and your reflexes, listens to your heart and lungs. That's what that is for the market, to us, is that series of baseline tests that tell you how healthy the patient is. We get 4 or more of those Asbury 6 constituent metrics. We get 4 of 6 of those metrics that turn back to green. That's going to tell us that the market is strong enough internally on a day-to-day basis. The patient is strong enough to get himself off the table and go back to work. We're nowhere close to that yet. And then the second thing, and the most important thing to us, is going to be the CPM, because the CPM is built to be a little bit more catch the more sustained and more solid emerging moves in the market. And the CPM would also have to turn to risk on. We don't have that right now, and I think it's going to take a little bit of time for the market to work through this. We had a great day, but look at the ranges over the past week in the S&P 500. They're all over the place. It's 100 up, it's 100 down. So I think it's very easy to get happy. We had a huge day today, but until I see those internals get better, I bide my time.
Yeah. And then Jack, anything that you wanted to add, kind of in terms of, again, how this there's so much that's different right now, and we were kind of talking about this, John, before, saying, like, I hate when people say this time it's different, this time it looks different, but this time it does kind of, there's a lot that looks very different. So with all your models, Jack, anything that you have in terms of advice for people that are trying to make sense of all this? from a numbers guy.
From the yeah, that was going to be my note. Is I tend to, when things are going crazy in the market, we tend to mute the TV.
Yeah.
We'll see where the price levels are, and we'll watch the numbers move up and down. But listening to the noise tends to kind of get you off sides.